Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. Today we're going to talk about valuation and the idea that creative valuation methods can change investor perspectives. And it starts with this premise. Valuation is a function of investor perspective. Different investors with different perspectives may have a different value of the same stock. And creative valuation is what Peter Lynch talks about in his book, One Up on Wall Street. And it's this idea of using unique valuation metrics or replacement value to unlock valuation discrepancies in stocks. And the key here is that alternative methods to valuation can help drive a change in perspective and increase investor interest. So why is creative valuation and changing perspective so valuable? Well, there's 4 benefits. The first is it may actually solve the key debate in the shares. Number 2, it may highlight a valuation discrepancy that you weren't aware of. Number 3, it may actually uncover valuation drivers the street had not previously considered. And number 4, it may actually provide the investor relations officer in the company a cleaner overview or explanation of the company for investors. So let's look at net asset value as an example, or NAV. And in a shipping industry context, NAV is simply the book value on the balance sheet or the scrap value of the boats in the company's fleet. From a REIT NAV perspective, there's more of a recurring economic value ascribed to the assets. You're considering net operating income, the cap rate you use to discount that net operating income, and maybe the assumptions around debt pay down over a series of time. A great example of this is Transocean, one of my favorite stocks. The shares currently trade around 6, balance sheet book value is around 13, so there's a lot of value to be unlocked. Now, if you use a REIT NAV approach to Transocean, you'll get a sense that the valuation range could be anywhere from $10 to $33 based on NOI assumptions, cap rate assumptions, and debt paydown assumptions. The bottom line is, with a valuation range that wide, it seems that there's a huge valuation disconnect in the underlying shares of Transocean. So what are the key learnings? Changing perspective can really turbocharge investor interest in your shares. And the second piece is always remember the right information plus narrative context is going to equal unlocked shareholder value. Thanks for watching. Always here to help with your capital markets, investor relations, and corporate finance needs.